20 minutes to the top. Now it's
Good afternoon and welcome to HYCM's Look Ahead webinar with myself, Giles Cochran, the Chief Currency Analyst here. Now, it's great to have you on board. Welcome as you guys are coming in. Hi, Lolu, Sean, good to have you. Just as you're coming in, could you please type in the question box and let me know that you can hear me okay? That would be very helpful for me, so I know that I'm coming across loud and clear to you. It seems to be okay my end. I'm just having a quick look while someone's, yeah, my microphone is working fine. If you don't know where the question panel is, it's just on the GoToWebinar control panel. There's a section called questions, and if you just click on the little arrow next to it, then a drop-down box opens. So if you're able to just type it in there, let me know you can hear me okay. That's always a relief. Great. As folks are coming into the webinar, just to let you know that we will be looking at different trade ideas, trade setups, etc. Oh, thanks, great. That's great. Thank you, Sean. Thanks for that. I appreciate that. You know what this webinar is not. It's not a trading advice. Now, this is particularly for the Tuesday workshop, which incidentally, the Tuesday workshop won't be run tomorrow because I'm speaking to CNBC Arabia and I'm doing a TV interview for them. So the workshop won't be here, but it will be back again next week. So just to give you a heads up on that. Now, it's just important to realize that these webinars are trying to help you guys see what outlook do you need to develop in order to trade the FX and commodity markets as a professional would. Okay, so I'm going to, as it were, look in over my shoulder and show you the thinking, the principles, the way I'm going about making trading decisions, and that will just help us as we understand it. That's mainly for the Tuesday workshop. Today is more like the FX week ahead, so we'll be looking in the calendar and just seeing what scheduled events are likely to really move the market, what kind of events are going to be particularly market moving in potential. So we'll be looking at that. As we get stuck in, I just want to look at some key events before we look at the scheduled events on the calendar. There's quite a few different key events going on, wanted to cover them. And the first one, of course, is the signing of the US-China trade deal, phase one. Now, all through 2019, we've seen the US-China trade war be a continual drag on the market. And I'll just show you, there we go. Just looking at the gold chart here, just to, throughout, we'll go to throughout 2019, we had the US-China trade war really kicked off in earnest around December 2018. That's when it really kicked off, and we've seen these strong bids in gold. Okay, gold has just hit $1,600 an ounce. This risk aversion was really prompted by the US-China trade war that we've had over the last year. So it's going to be very important, obviously, whether that phase one trade deal gets signed. Now, the reason I wanted to flag it up is because be aware that the phase one trade deal may not actually be signed. It's due to be signed on the 15th of January. That's what I'm seeing on the Wednesday. All indications are that it will be signed. Now that's fully priced into the market now. So just to be aware that we may get a buy the rumor, sell the fact response if the phase one trade deal is signed off. So we've seen some strong bids in the equity markets, S&P 500, Dow. We've seen record highs in US equity markets. Just to be aware that we may get a buy the rumor, sell the fact response. Some other things to be, yeah, that's the profit taking. So just to be aware of that, and this is expected that the phase one trade deal will be signed. Now, a couple of things to be aware of. One, there's no definite certainty about what is being signed. So the detail could be potentially market moving. So watch out for the detail. Secondly, watch out for a breakdown in talks. Now, this is a potential, and we don't want to rule this out. And if we do get a breakdown in talks, I'll show you the currency and the commodity pair I'll be looking at. So the commodity I'll be looking at will be gold. And if we see a breakdown in talks, I would expect some strong bids into gold and retesting that $1,600 an ounce as a first target. Just see if there's any pivot points up here. Yeah, so I'd be expecting a first target, 1570, which if the teal broke down, that would be hit virtually instantly. And then the next target would be the $1,600 an ounce target there. That would be what I would be expecting if the deal doesn't get signed. Now, looking at the Australian dollar, Japanese yen, now this pair is a really good pair to trade for risk on, risk off sentiment. And the reason it is because when the market is concerned, it buys the yen, okay? And also it sells the Australian dollar. Now the Australian dollar, about 30% of Australia's GDP comes from its trade with China. So if there's some bad news for China, it's bad for the Australian dollar. So if the US-China trade deal breaks down, we're going to see both sides of this currency hit in different ways. So the Australian dollar will be sold because of the risk associated with its close links to China, and the Japanese yen, on the other hand, will be bought. So we'd expect Australian dollar, Japanese yen sellers. So again, just to be aware of that, and if the US-China phase one trade deal does break down, I'll be looking for a test down to 74. So that's, just what I'm looking at, just to help you see. Again, that's not trading advice. That's just showing you what I'm looking at. So breakdown in talks, I'd expect bids into gold and sellers on Australian dollar, Japanese yen. Now, the other thing to look at for the US-China trade deal is phase two talks. We've got phase one, and we've got phase two. So the idea is that phase one is signed in Washington, and then President Trump makes his way over to Beijing, and moves are made towards signing phase two, certainly negotiations. So if phase one is signed, we're not only looking for the detail, we're also looking for any information on phase two. Will there be any mentions of energy? What about some of the agricultural farm goods? Is that going to be extended? Is it going to be expanded if that was possible? I think already the figures that have been spoken about are already very ambitious and more aspirational. But anyway, the main point is look for phase two chat. If things just stay as they are, and the current kind of status quo is about 50 billion US dollars of Chinese purchasing agricultural farm products from the US. Okay, that's about what it is. So any more detail would be helpful. Any more than that, any more trade cooperation would be helpful. So, but that's roughly what's expected. And if we get more vague sentiment, then expect the market to stay where it is, and I would be looking for profit taking and potentially a buy the rumor, sell the fact response. So that is one to watch out carefully for. Another key geopolitical event, and I'm sorry, but there are a few, and this is US-Iran crisis. We have seen spikes in gold, spikes in oil, and spikes in the yen and the Swiss franc because of the US-Iran crisis. Now, it was Mr. Suleiman Khamenei, who was assassinated by the US. Sorry, I got confused with the name of the top Iranian general who was assassinated by the US. But that flared up the crisis. Now, at the moment, there's been a distinct de-escalation between the US and Iran. However, the thing to watch out for is if we have any Iranian military action that prompts a US response or retaliation, that would be an escalation in that crisis. At the moment, that seems very unlikely. The US and Iran both don't want open conflict. they've both made considerable efforts to de-escalate the situation, including Iran when they retaliated, as it were, against the US. It was no coincidence, in my view, that there were no US casualties. So there was no reason for President Trump to retaliate to Iran's attack on the US military base in Iraq. So, but watch out for a flare. It's a very volatile situation. The Iranians have admitted accidentally shooting down a passenger plane. There is internal difficulties within the nation. These are difficult times, particularly for Iran, as it's trying to really work out what it does. It was a big blow losing their top general. And when people are rocked, they can do unpredictable things. Be aware of that. Sadly, it's a very sad situation, and I hope that it remedies as quickly as it can. But if it doesn't, remember, we're likely to see a very similar response to a breakdown in US-China trade negotiations. So again, I would look at a yen pair. The Australian dollar Japanese yen pair is my go-to risk-off pair, and obviously the gold market as well. We'd expect bids into gold market, just like we saw on the escalation of the crisis. So I'll just show you. This was on the, it was a Friday when we had, on Friday 3rd of January, we had the assassination of the top Iranian general. We had gold bids into those highs, and then we had a spike on the following, after the weekend, and then we had another spike on the attack of the US airbase. So that was the assassination attempt, the concern, and then that was the spike higher, which was the retaliation of Iran on the US. So that's what safe haven bids were happening there. So if we did get another retaliation or more escalation, expect further gold bids in a very similar way to how I outlined with a breakdown of the US-China trade negotiation. This was the slide I used last week, and I was just outlining some of the key situations, what I was expecting, and just wanted to point out oil. You know, oil was bid, but I pointed out last week that desks see limited upside oil from here because the oil market is very well supplied. Okay, so that was just worth having a little look at the oil market, and you can see that on the daily chart you've got this huge bearish engulfing bar rejecting this 6,500 level. You've got key overhead resistance here and here, and even just fell short of this 66 level, but still it's kind of a rejection of it given how close it went. And we're seeing these strong selling in the US oil market. The reason the oil market spiked was on potential supply issues. If Iran got dragged into a conflict with the US, then maybe Saudi Arabia gets dragged in. Remember the Iranian drone attack on Saudi Arabia? Maybe Kuwait gets dragged in. What about Iraq, etc., etc. So that's why oil prices was bid. But then the market realized, well, hang on, the oil market's really well supplied. OPEC are talking about supply cuts in order to try to support the oil market. So just to be aware, it's worth looking at because it's a very well supplied market. So if all things being equal, I'm expecting oil sellers on any retrace. So that's a large bearish engulfing bar. So I'm expecting oil sellers back at 62, 63, 64, expecting sellers there. And you have that pivot point here with potentially expecting sellers there. So just look out for that. Just a little tip for folks. Well, wanted to quickly just outline the trades that I was taking. I closed my gold trade out. I just want to go through that with you. That was on the seasonal demand. I've mentioned a number of places for HYCM that gold is bid strongly in January. It has been for the last 6 years in a row. The US Lunar New Year comes, people buy gold as a gift for their friends and neighbors. Gold's bid. So those seasonal bids for gold plus safe haven demand just led for a very strong move in gold. You can see I was hoping for a 1633. If I got a spike up to there, I was going to be taken out. However, you can see here that I put my entrance here on the 13th of December, stop loss just below, can see that this was the obvious place to enter. Wanted to get in early for the seasonal demand. Christmas was coming up, so wanted to get in and just put my stop in a logical place. Now, if price had fallen back down to the 1400 level, my next long, I would have had another go at it at the 1400 level with stops probably here below 1360. Okay, that would have been a next obvious place. As it happened, the trade just moved straight off, and I took profit here at 1572. So, you know, all in all, not bad. Similarly with oil, this is when we had the oil demand. So I waited for a retracement in oil and took profits at these recent highs here. I just moved my stop to break even going into the weekend. I thought it was worth holding because we had the US-Iran crisis going on, and I thought, you know, it's not like there's going to be a major de-escalation. If there was, then I saw downside in the short term limited, and upside, you know, more potential. And I just took my profit there on my oil long. So just going through that, and that was from start of January. That was 5th, 6th of January. So we'll go over those couple of trades, see the thinking, the rationale behind it. So, right, let's look now for the week ahead. Starting to get back into the year properly now, and a couple of things to look out for. With pounds being pressured today, the reason the pound's been pressured, we've had a series of dovish speakers out of the Bank of England. You know, Vliegi was speaking, we've had, I think, Saunders speaking, and a number of Bank of England members are saying that they're more seeing a downside for UK interest rates. So obviously, if interest rates are cut, then that results in the pound falling. That's why we've seen the pound falling today. We've also had a slew of data. Broadly speaking, the data has been, roughly poor. Okay, on a balance. So got Bank of England speakers talking the pound down, and you've got some poor data out of the UK. That's why we've seen the pound pressured, and I'm looking for further pound downside today. So expecting pound sellers. CAD Business Outlook Survey. Well, the Bank of Canada is at an interesting point at the moment. The Bank of Canada has been more upbeat recently. They'll be very pleased if the US-China trade deal gets signed. That's one thing they're looking at. So I'm expecting this Business Outlook Survey to be roughly positive, will be my expectations. Just because the US-China trade deal is about to be signed, people should be upbeat. So that's what I'll be expecting. We also had some data out on Friday. And the data out on Friday last week was an increase for Canadian jobs. You can see here, employment up and unemployment rate down. Always good news. So just to show you that there, you can see, you can look at it in your own time, Friday, January the 10th, but that's supportive for the Canadian dollar. So Business Outlook Survey is important, so look out for that. Business confidence. Now, easy to overlook this one, but it's important for the RBNZ. The Reserve Bank of New Zealand looks at this business confidence point for making their interest rate decisions. You can see recent business confidence has been very low in New Zealand. Look at these really low figures, okay? So, if we get more low business confidence, that will be looked at. You can see here, look, the last, June, July, August, September reading, -40 roughly, and, 2020, you can see how low that business confidence has been. I don't know why that's saying September 2019, where it's just more like December 2019, but you can see that these are the lows here in the heart of the financial crisis. So just watch out for that. A weak New Zealand business confidence data point will weigh on the New Zealand dollar overnight. So just look out for that, any New Zealand dollar traders, and could potentially provide opportunities for the next day. And you might get buyers or sellers and pullbacks depending on whether it's a good or a poor figure. US dollar CPI. Now, just to be aware that this is important, inflation data is important because at present, the dot plot for the Federal Reserve is showing no interest rate changes in 2020, expected to be flat. The market is pricing in one interest rate cut. Now, CPI is a primary focus for the US dollar, as well as the US-China trade deal. So for US dollar trading this week, look at the US-China trade deal and look at the CPI data. They are saying that they would need, the Fed are saying they need to see a prolonged uptick in inflation to even consider hiking interest rates. So look out for that. Core CPI figure is the one to look out for. Obviously, a downtick in that will be negative for the US dollar, and even an uptick. The Fed want to see a prolonged boost in inflation. Since we've had quantitative easing, we've struggled with inflation across the world. Japan's been struggling with inflation for years, decades, and the ECB is struggling. The US is struggling. There's a number of key countries that are just struggling with inflation, so keep that in the bigger picture. We've got pound data out here, just to factor that in. We've got Saunders speaking, just to be aware. Bank of England speakers is in focus at the market, so that pound traders look out for Saunders. If he takes an unexpected tilt, watch out for that. A good website for you to follow that is forexlive.com. I post for those guys each day and do some analysis for them. If you go up onto their website, they will give you a quick update on what's happening just before that event, so you can see if there's been any change in the Bank of England speakers when it comes to Wednesday. Have a little look, and that'll help there. Not much going on here apart from this should be the US-China trade deal being signed. So don't forget that big picture is going on all the while. On Thursday, we have core retail sales out of the US. Look out for that. Generally speaking, the US consumer has been strong and supportive. So as long as that figure keeps being strong and supportive, that's good. Remember, we had some weak non-farm payrolls data out last Friday, so that weighed on the dollar a little bit going into Friday. So I'll just show that there. You see, we had average hourly earnings were down, and we had a sort of surprising downtick in employment as well. So just to be aware of that. But unemployment is still really low. When you look at the unemployment levels, that's solid, isn't it? Unemployment's record lows, so that's not too bad. Mixed bag again, but near-term focus was on the miss of the average hourly earnings and the headline figure for non-farm payrolls. And then going into Friday, obviously had GDP data out of China. That will be important, but of course, remember it's a US-China trade deal, which is going to take main focus. But look at 6% expected, and you can see that GDP has been falling for China. As a lot of the reasons for the, in my view, for this fall in China's GDP is just that it's going from a developing nation into a very developed nation. So you don't keep increasing, 10, 11, 12% year on year when you are, when you're developing in this way. So it's only normal to see a slight pullback in China's GDP. But remember, that's very big picture stuff. In the short term, obviously the 6% figure will be eyed carefully. Pound retail sales, again, a little tip here. Generally speaking, for the last few years, on this retail sales figure, because of the way the data is collected, this data here for January actually includes the Black Friday data before Christmas in the UK. So historically, there's been a spike for those Black Friday sales. So this retail sales data historically tends to outperform. But word of caution is that outperformance tends to last for only about 15 minutes, half an hour. So in other words, one way that someone might try to trade that retail sales data is just to open a long pound position before the retail sales data and then close it on the release. So buy just before and close it on the release, because often this figure tends to be twisted by the Black Friday sales data. However, conversely, if this data point is weak, then I would expect strong pound selling out of that figure, because it's normally expected to be strong, particularly this time of year. So, a weak retail sales figure will show that the British consumer is really, is feeling nervous. Now, remember, because of Brexit in the UK, that doesn't give the UK consumer confidence. And, living in the UK, the general mood has been very negative and down. So that's the only downside that I've got for this retail sales data point, because of the recent mood that has been in the UK. Okay, guys, it's been great to have you. Just to remind yourselves, I won't be here for tomorrow's FX Week Ahead FX workshop, but don't forget we've got the coaching that's available here. If you'd like to take advantage of that coaching, please do get in touch with your account managers. Guys, I hope it's been a pleasure to have you. Yasser, Sean, Salvatore, Mohammed, Lolu, and thank you very much for attending. I will be back next Monday and next Tuesday. I hope you have a fantastic week. Look out for that US-China Phase 1 trade deal and stay locked on. And I hope wish you every success in the market for the coming week. Take care. Thank you now. Goodbye.